I've always said it's either something or it's nothing. If it's embraced as an institutional asset, if it's legitimized as an asset, then it's not going to zero. And if it's not going to zero, it's going to 1 million. And I think the short answer to your question is education, and with education comes adoption.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. In this video, Michael Saylor dives into the idea of a U.S. Bitcoin reserve, the transformative future of Bitcoin, and a massive wealth opportunity in 2025. Let's catch his vision to learn more.
And at this point, you just have 95% of the world that still doesn't quite understand what it is. And that means, the way Bitcoin marches from 100,000 to 13 million, and by that's for your listeners, you're referring to my long-term forecast. I gave that forecast in Nashville in July of this year, and is based upon the Bitcoin 24 model. So the Bitcoin 24 model is an open source macro model of Bitcoin adoption and macroeconomic development over the next 21 years. Anybody can go to Google and they can Google Bitcoin 24. They'll find it on GitHub. You can download that model. You can plug in all your own assumptions and you can check what we thought. But my forecast is Bitcoin, in essence, it's growing 60% a year for quite a while now, and I'm forecasting it will decelerate to 20% a year over 21 years. But that means on average it grows about 29% a year, ARR. And that 29% a year for 21 years gets you to 13 million a coin. And so what do I expect to happen? Well, I expect lots of high net worth individuals that previously thought it's too risky or it's too scary. They see it legitimized by BlackRock. Now, BlackRock is giving guidance that you could have 2% of your portfolio in Bitcoin. And they're seeing the ETFs like IBIT. And they're noticing that these are the most successful ETFs in the history of the world. And BlackRock has got the most successful ETF ever launched. And now they're seeing the world's largest money manager, BlackRock, with more than $11 trillion of money managed. They're seeing them publish scholarly, thoughtful, responsible white papers on portfolio allocation. And instead of the 60-40 model with 60% equity and 40% bonds, now you've got 2% that they're saying you might want to put into a crypto asset like Bitcoin.
The Bitcoin funding rate, analyzed through its 30-day exponential moving average, EMA, reveals no signs of late-cycle overheating, according to a prominent crypto analyst. This metric indicates that the market remains stable, with Bitcoin's upward price trend showing significant potential for further growth. CryptoQuant contributor Avocado Onchain highlighted in a recent report that the absence of excessive froth in the funding rate suggests Bitcoin's price is not nearing a premature cycle peak. Adding weight to this outlook, pseudonymous trader Rect Capital noted that Bitcoin is in the early stages of its parabolic phase. This phase, which typically lasts around 300 days, is currently only on day 41, signaling substantial room for continued upward momentum. Supporting this, CoinGlass data from Binance, the largest crypto exchange, shows a funding rate of 0.84%, a far cry from overheating levels. During August's price drop below $60,000, the funding rate hit its lowest point of the year, reflecting a shift in market sentiment. However, since October, a simultaneous rise in trading volumes across futures and spot markets has fueled Bitcoin's price surge. Analysts suggest this heightened activity underscores Bitcoin's robust trajectory. Predictions for 2025, driven by institutional inflows, project conservative targets of $145,000, with favorable conditions potentially pushing the price to $200,000.
So I think that you've got that group of people that are finding it. I also think you've got institutional investors that are moving into Bitcoin more frequently now. A lot of them are big investors in MicroStrategy. A lot of them trade MicroStrategy options. MicroStrategy's been the most successful stock in the S&P index. We're not in the S&P, but we're more successful than all 500 S&P companies for the past 4 years. I think this year too. So we're getting the attention of mainstream investors, and that's bringing a set of new investors to the asset class, because when they buy our stock, we buy Bitcoin with it. I think the third driver is a bunch of Bitcoin standard companies. A lot of companies are recapitalizing their balance sheets on Bitcoin. MicroStrategy was the first, but Mara has done it, M-A-R-A, and Riot just announced they're doing it, R-I-O-T. And the most successful company in the Japanese stock market this year is Metaplanet, and they just did it. And Semler Scientific just did it, and they tripled their stock in very short order. So you've got like a half dozen companies that are recapitalizing to the Bitcoin standard, but you've got 60 companies that have Bitcoin, and there's a lot of companies that are getting more heavily involved. I think recently Hut 8 announced, Hut, H-U-T, and then Rumble, R-U-M, and so a bunch of public companies that are kind of, they're innovators, and they've got a fairly open mind, and they're flexible. And the really important thing about that, Tom, is when a public company adopts Bitcoin, they start sweeping their cash flows into it. But then after that, they may start issuing equity. And then after that, they can borrow money. So Riot just this week issued a $500 million convertible bond, and then they bought Bitcoin with it. And Mara...
Is this Riot Games?
No, Riot Bitcoin mining. R-I-O-T, Riot.
Solana is catching attention with a potential bull flag pattern that hints at a significant rally toward $300, despite facing bearish pressures in recent weeks. After reaching an all-time high of $264 on November 23, Solana has entered a consolidation phase marked by lower highs and lower lows over a 25-day period. While this short-term downtrend has raised concerns among traders, long-term chart patterns suggest a more optimistic outlook. The daily chart for Solana reveals a repeating bull flag fractal, similar to one observed in January 2024, which preceded a triple-digit rally in the first quarter of the year. This pattern, coupled with the price retesting the 50-day exponential moving average and the relative strength index resetting below the 50 mark, indicates strong bullish momentum. If the fractal holds, Solana's immediate target lies near the $320 mark, with a longer-term potential of $440 based on Fibonacci extensions. Prominent analysts have echoed this optimism, describing Solana as primed for an absolute monster run. While lagging behind Bitcoin and Ethereum in recent returns, Solana is testing key support levels against major trading pairs like USDT, Ethereum, and BTC. This has fueled expectations for a breakout, especially if the altcoin can surpass $235 in the near term to establish a new bullish structure. Traders and analysts emphasize that the recent price movements reflect a simple breakout and retest, rather than significant bearish signals. As Solana continues to build momentum, its historical patterns and technical indicators suggest a promising path forward, with potential milestones that could reshape its market narrative in the months ahead. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.